Good morning everyone and welcome to another RF crypto video. Today's markets haven't really moved much. The markets have gone up by less than a percentage point. The crypto market cap is standing at 1.27 trillion. Yesterday it was at 1.26 trillion, which is still lower than last week's 1.3 trillion. Remember that the price of Bitcoin was edging towards 31,000. However, we then saw a drop back to less than 30,000, which is the psychological support level. And it went all the way down to 28,000 and now it's stabilized around that $30,000 level. As you can see, it's 29,760. So the whole market is a mix and match of red and green. A lot of coins have gone down, especially the altcoins. However, there are a lot of coins that have also gone up. So they basically cancel each other out, and that's why we see a 0.85% increase, which is almost negligible. In terms of the Bitcoin chart, we see that the price of Bitcoin is still trading between the 28,500 and the $30,000 levels, with 28,500 being the support level and $30,000 being now the resistance level. We see here that today at around midnight, there was an attempt by the bulls to break above the $30,000 resistance level. However, following that, 4 hours later, the bears got into the market and pushed the prices back down to 29,600. So what is happening in the market at the moment is that the bulls are trying to push the prices above the $30,000 level. Those who have a positive outlook on Bitcoin, however, the ones who have a negative outlook on Bitcoin, or the bears, quickly want to push the prices down. And this may have to do with the fact that the bull traders have long positions opened, which means that they'll profit if the price goes up, and the bear traders have short positions, which will profit if the price of Bitcoin goes down. Therefore, it is a tug of war. If you can see here, it goes up and down, up and down. However, it is trading at a median of the $30,000 level, which is a psychological level. So Coinbase becomes the first Bitcoin company among the Fortune 500. Coinbase, which is the largest US cryptocurrency exchange, has become the first cryptocurrency-focused company to be included in the Fortune 500. So the exchange pulled in $7.8 billion in revenue for the 2021 fiscal year, ranking about 437th on this list. However, when ranked by revenue growth, Coinbase at nearly 514% trailed only Moderna at almost 2,200%, which is obvious that Moderna will have such a high revenue increase due to the fact that they're the producers of the RNA vaccines. So Coinbase, in terms of revenue growth, is second among the top Fortune 500. And Coinbase was very clever in the way that it marketed itself and was able to attain so much of clientele and so much of revenue. Because cryptocurrency was becoming very popular in late 2021, when the total crypto market cap was above 3 trillion, just remember that now it's 1.26 trillion, which is less than half. Coinbase marketed itself everywhere, from the NBA to the world of esports, and it marketed itself as a go-to destination for investing in digital assets. And this is why they got so many clients. And although Bitcoin is low and shares have been down by over 80% since November's market high, it comes to a point now where the crypto market has crashed, and we have seen that its share price went down by over 80%. Q1 revenue registered less than half of that of the previous quarter's sum. Also, monthly transacting users fell by 2 million during this time. Despite this, Coinbase isn't showing any worry. The company's pinned tweet from last Wednesday mocks those who would consider crypto industry dead. And they also say that volatility is painful and it can be scary. And he also said that volatility is also natural for emerging technological breakthroughs like crypto. And he's completely right, because blockchain technology is here to stay. And with that, cryptocurrencies are also here to stay. Therefore, they're not worried about this bear market. They're not worried about this volatility. They're just investing in what they think will do well in the future. They are putting their money and resources into developing blockchain technology and to developing cryptocurrency exchange, and they're probably speaking with regulators to discuss what are the best ways to go forward in terms of what the exchanges need and what to offer clients in order to comply with the current regulations and also any potential future regulations that might come into play. And this is a very clever tactic from them, because they know for a fact that crypto is here to stay, so they want to stay ahead of the curve. They want to be the leaders. They're already the leaders, because they're the first crypto company that are in the top 500 companies. So naturally, they want to build on this and continue being the leader. and moved further up from 437th out of 500 in the list. So crypto asset managers are chasing high yield with new investment products. They are now betting on lending amid the market downturn with yield products that boast modest annual returns. So before the Terra Luna crash, there was a lot of coins which offered over 15% returns, and obviously that wasn't sustainable. For example, Terra's recently imploded Anchor offered 20% yields generated through murky means. And by murky means, they mean that it wasn't sustainable, it was more like a pyramid scheme, and obviously a pyramid scheme always collapses. I'm not saying that it is a pyramid scheme, but that it could reflect one if it's offering yields that are so high and sort of like too good to be true. By contrast, these new yield products generate returns through rational rails, which works by rolling out USD income funds that loans investor dollars to counterparties like Coinbase and Gemini, who then loan them into the stablecoin market in the chase of 4 to 8% yields. So 4 to 8% yields aren't extreme. They are attainable. If you invest in, let's say, the S&P 500, you might get 4 to 8% yields, maybe 10%. However, by loaning investor dollars to counterparties like Coinbase and Gemini, who are already established and who have a lot of liquidity, for modest yields means that it is quite safe. And these crypto funds are now aggregation points for cash that is entering the market, because they aggregate all the money from investors and then they split it into companies like Coinbase and Gemini, who obviously then loan them to the stablecoin markets. So it is sort of like a funnel where from the bottom all the money comes in and then it spreads out. And this also works to spread risk, right? Because if the money is spread between different yield operators, then it means that if one goes bad, at least the other ones are there to cover the losses. There's also another type of investment that's come up, which is one example is the European crypto issuer 21 shares USD yield ETP, which is an exchange traded product, and it's 5% target yield. So this is listed on the Swiss SIX exchange, and it was listed on Wednesday, and it plans to lend out each invested dollar for $1.10 and $1.50 in Bitcoin and Ether as collateral, which is sort of like an insurance policy if the borrower implodes. So if the counterparty sort of like becomes illiquid and collapses, the investors can just go knock on the custodian's door and say, hey, they're gone, give us our money back. So Google seeks fresh talent to lead global Web3 team. Following the establishment of a Web3 team under Google Cloud on May 6th, tech giant Alphabet's Google is now on the lookout for full-time candidates to lead its Web3 marketing strategies. So this role is tasked with raising awareness about Google Cloud's Web3 initiatives, in addition to eventually building customer demand for related offerings. And they basically want to invest in something that is still new to the market and hasn't had a great deal of adoption yet. So Vice President at Google Cloud, Amit Zaveri, has said that while the world is still early in its embrace of Web3, it is a market that is already demonstrating tremendous potential, with many customers asking us to increase our support for Web3 and crypto-related technologies. Despite the fact that we are in a bear market in terms of crypto, there is incredible demand for blockchain technology, which includes Web3 and also other crypto-related technologies, as evidenced by the fact that Google is expanding its Web3 team. So Polkadot founder Gavin Wood also said that Web3 pushed the conversation beyond Bitcoin, smart contracts, and decentralized finance into the underlying technology that powers the world of crypto. So it's a good thing that Web3 is being pushed, because people are not only focusing on cryptocurrency, they're now trying to understand what is the underlying technology behind cryptocurrency, because blockchain, which is the technology, can be used for a lot more than just cryptocurrency. And if people realize its potential, they can use it to develop numerous products that has the potential to revolutionize how we do everything from finance to healthcare to supply chain management to even government affairs like elections. So Mercado Bitcoin partners with Stellar to create MVP for Brazilian CBDC. So Brazil is a country that is very much committed to releasing a CBDC this year. So Mercado Bitcoin intends to develop one of the 9 projects selected for the Lift Challenge Real Digital promoted by the Central Bank of Brazil. And these projects are basically there to analyze the use case scenarios for the digital real and also how the digital real can be implemented into the market as a CBDC. And in addition to the consortium created by Mercado Bitcoin, the Central Bank of Brazil also chose the DeFi Aave protocol and Consensus in partnership with Visa and Microsoft to develop use cases for the nation's digital real. So not only are they creating a consortium of cryptocurrency exchanges, but they're also using DeFi platforms and traditional payment platforms such as Visa, and also traditional technological companies such as Microsoft to develop use cases for the nation's CBDC. So it's a fantastic initiative because not only are they partnering with crypto companies, but they're also partnering with traditional companies, which will make it so much more interesting to see how all of these will work in conjunction with each other. Maybe they can offer synergies that they couldn't have offered if they only worked within that industry. And I think that Brazil will be one of the countries that will implement a CBDC that will work well for not only the government, but its population and also companies that are operating in the cryptocurrency and blockchain industry. And with that, we come to the end of today's video. Thank you very much for watching. If you enjoyed the video, please leave a like, hit the subscribe button, and share this video with your family and friends. Invest wisely, and cheers.